For Your Money is brought to you by NelsonCorp Wealth Management.
It's now time for Your Money. We're joined by David Nelson, CEO of NelsonCorp Wealth Management. Welcome back, David.
Thank you, Brandy.
We have heard a lot this year about rising inflation and the Federal Reserve raising interest rates. How have those dynamics been playing out in the financial markets?
Well, clearly plenty of volatility this year. We've had a lot of moves as far as 1%, 2%, 3% as far as year to date. While the attention has been basically focused on the stock market and the geopolitical, a little attention has been given as far as to the so-called safe haven of government bonds. The chart that I wanted folks to look at here, I think, is going to give a really nice visual as far as what we're talking about. And that is, I think people be surprised to know that this is the worst bond market that we've ever seen. In addition to that, the Bloomberg Treasury Bond Index, which is the top blue, is showing as far as the index over a period of time, where the red is looking at the actual returns as far as what they've yielded or not yielded. We're running at 2 years now as far as where it looks like we're going to set a record for all-time lows as far as returns, as far as on bonds. We're down 9% from the peak in 2020.
So is there anything investors can do to address some of these issues?
Well, I think they need to be careful as far as the type of bonds that they own. If they're going to own bonds, you clearly want to be, our opinion, as far as on the short end meaning bonds that aren't long maturity. When we look at performance, the declines that we've seen in the bond market are basically rivaling the negative returns that we've seen as far as in the stock market. This is extremely rare. People need to look at the options that exist out there. Commodities and real estate may be something to consider.
If you missed any of our discussion, we'll make it available for you on OurQuadCities.com.